Put your phone on.
Hello everyone, Joe Vitale, American Retirement Advisors with the Great 8 Investments weekly talking points for the week ending March 26, 2021. Let's talk about some stocks. So the large cap U.S. stocks led the gains last week with the S&P 500 rising 1.58%, the NASDAQ eased 0.57%, and the Russell 2000 declined 2.88%. Now overseas markets were down with the International Developed Stock Index, the EFA, lower by 0.54%, and the emerging markets dropped 2.15%. In the U.S., the best performing sectors were real estate and staples, while the communication services and consumer discretionary were the laggards. Now let's talk about some fixed income. The interest rates declined and bond values rose last week with the benchmark 10-year U.S. Treasury yield down 7 basis points to 1.67%. The yield curve was basically unchanged as rates declined across all maturities. With commodities, the price of silver, which is a precious metal strategy holding, fell 4.3% last week on worries about industrial production due to the shortage of the semiconductors for auto and electronics manufacturing. In economic data, the existing home sales, 90% of total home sales, fell 6.6% last month, more than anticipated due to inventories of homes on the market. Horrendous weather in large swath of the country as mortgage interest rates edged up. Despite the month-over-month drop, sales still rose 9.1% on a year-over-year basis, although there was a 30% drop in homes available for sale. The average home price rose 15.8% versus a year ago to $313,000. There's just not enough inventory on the market, so they are being snatched up very quickly, as you can imagine. Now, business activity for service providers in early March rose to their highest level in nearly 7 years. Service-oriented businesses such as restaurants, resorts, airlines, and hotels posted the steepest increase in business in almost 3 years. Both the IHS Market Service Index and its Manufacturing Index edged higher as the U.S. economy has been reopening and stimulus checks were distributed. In February, the U.S. orders for durable goods were down for the first time in 10 months as severe weather impacted orders across every category except airplanes. Excluding transportation, orders dropped 0.9% in February versus expectations for a 0.7% gain. This largest drop occurred in vehicle manufacturing, which has also been affected by the shortage of semiconductors. Company news, retail stock holdings across multiple gradient strategies, including Costco, Dollar General, Dollar Tree, Home Depot, Lowe's, and Target, and Walmart de Mexico, rose between 5.1% and 11.6% last week on the renewed optimism for consumer spending, despite difficult year-over-year comparisons from the spring and summer of last year. Now, the billions in stimulus check to lower and middle income households, along with expanded unemployment benefits and increased tax credits for family with children, have prospects to boost demand for products sold at these retailers. That's it for today. We hope and pray you're all doing well and enjoy this beautiful weather. We're very thankful for you and having you part of our family. God bless you. And of course, if you have any questions, feel free to give us a call at 855-756-5700 or visit us at aradvisorsinc.com. Have a great week. We'll see you next video.